First support is 12 to 13,000. I think in the near term, we're going to see a little bit of a bounce, then a wave down to 12 to 13. And then I do worry that you're going sub 10 to 8, maybe even worst case scenario, 3,500. 3,500, very small percentage, but that would be the equivalent of Amazon.com's collapse in the .com era if it were to equal that.
Gareth Soloway, the president, CFO, and chief market strategist of InTheMoneyStocks.com, is popularly known for his contrarian view of the markets. The most controversial of his recent predictions is his stance on Bitcoin, the world's largest cryptocurrency. According to the popular technical analyst and trader, Bitcoin could still lose a few more $1,000s before it bottoms. In a recent interview, Soloway, who regularly updates his predictions based on market trends, gives an update on inflation, U.S. Federal Reserve policy, and his Bitcoin prediction. He explains that the U.S. economy is already in a recession, and the markets are about to have a cliff dive due to the Federal Reserve's aggressive interest rate hikes. He adds that when this painful dive occurs, the central bank will have no choice but to ease up a little to avoid causing greater economic damage. But before that pivot occurs, Soloway is convinced that more pain lies ahead for investors as he expects all asset classes to take a deeper plunge. For Bitcoin, that would be a move to $12,000 or, in the worst-case scenario, $3,500. But when the pivot finally comes, as Soloway expects, Bitcoin and other crypto assets will pick up again. Soloway also believes the crypto asset could finally move away from its correlation to the stock market. We will now take you to Gareth Soloway's latest market update. Please watch the video to the end and hit the like button. Also, ensure you drop your comments and observations in the comments section. Subscribe to the channel and turn on post notifications for more videos like this.
There's no doubt that there's panic in the markets, but per the VIX, we haven't hit the levels where I would say there's a market bottom yet, right? So I've been consistently saying, yes, you're going to get bounces when you get these big sell-offs, 2%, 3%, you get that kind of mid-level panic that triggers a bounce, but by no means is the market at a near bottom yet. You know, you still have the Fed that's aggressively hiking. As of now, we'll see what the CPI data is coming up, but for the most part, the Fed is hiking. We have an economy that's going to slow down. And I think to be honest, that's one of the biggest concerns I have. And this is kind of shocking. This will be shocking to people, but you have $1 trillion in savings that consumers accumulated over COVID, right? And so the Fed is saying, oh, look at these jobs numbers. They're still very, very strong. People are still spending. The consumer's still doing well. So we have to continue to hike rates. Problem is, consumers are going to run out of that money that they saved probably by mid-next year. And my biggest fear, and this is this could be what triggers a massive kind of recession, if not worse, is that when they run out of money and the Fed has just hiked and hiked into it, there's going to be a cliff dive in the economy. A recession can be mild, right? I mean, you could have, okay, it's a little minor recession. I mean, even the Fed has said, hey, we don't care if we push the economy into a recession. But a cliff dive, that's where you have unemployment going to 5, 7, 8, 9, 10%. And that's where you get in trouble, where the Fed then has to start lowering rates instead of just going to neutral where they're not hiking anymore. And potentially down the line, I do worry that it's going to get so bad that even with 4% inflation, you still could see a point where in like a year, 2 years from now, the Fed has to actually start QE again. I think they won't want to do, if they've done 75 3 times in a row, it's unlikely they would now jump, because that would really freak the market out to go to 100. So I think you're going to look at 70, or if the CPI data and the economic data shows that we are seeing a lowering inflation number, then maybe you get a 50 in there. I do think that a lot of other central banks, like Bank of England, we know they've stepped in here. There's a lot of concern out there from other central banks saying, hey, Fed, you're doing this too quickly. Our economies, our currencies can't handle. You're going to break us.
Are you afraid of foreclosures around your neighborhood? Are you afraid of another Lehman-style crisis? Are you afraid of contagion like we saw in 2008?
Yeah, I am, absolutely, because number one, we've heard about Credit Suisse, right? I mean, there was rumors just a couple weeks ago or a week ago about Credit Suisse having issues. And the thing is that, the Fed has enabled the financial sector to do a lot of the same things they did in the last financial crisis, right? I mean, it's almost like no one's learning from the rules. I mean, even Dodd-Frank kind of got pushed under the rug a little bit. And that just, so it's like the short term, everyone's just focused on how can we be the most robust economy in the short term. Well, guess what? Eventually that breaks, and that is an issue for sure.
As Soloway has explained, we are already in a recession, at least going by the technical definition of the word. Several financial experts, from Cathie Wood to Ray Dalio, also agree that the United States economy is indeed in a recession. But the Federal Reserve is not stopping to read the signals, which could mean a greater downside for the economy later on. As Gareth Soloway puts it, the economy is already at a deep cliff, and the financial market is about to tip over. After the Bank of England's shocking quantitative easing announcement, all eyes have turned to its U.S. counterpart, which has so far shown no indication of backtracking. In his interview, Soloway explains that unlike many predict, the Federal Reserve will not go around buying up bonds like its UK counterpart anytime soon. However, he does believe that we could get a Fed pivot as early as the first quarter of 2023 when the Fed finally realizes the impact of its activities on the economy. Please listen as Soloway discusses Fed policy and the impact on Bitcoin and other assets.
So the Fed isn't gonna, so there's two things. Everyone thinks a pivot is where they start dropping rates. Yeah. My pivot is where they go from 75 to 50. So it's like the downsloping mountain versus the upsloping climb.
I'm talking about just straight up stopping raising rates.
So just going to neutral. I do think by 2023, early first quarter, they're done. And I think you're going to see the jobs numbers. At some point, these jobs numbers are going to crack, and we're going to see a big drop and a fast drop. And again, this is going to coincide with people running out of this COVID savings and all of a sudden really pulling back. And think about 401ks. Think about your house. Like, as we see the housing prices fall, and we're starting to see that now, the wealth effect disappears. And people feel like it's one thing to say, I'm going to go buy a new car because my house just went up 100K in the last 3 months, and you know what, the economy's rocking. But now all of a sudden your house drops 100, 200,000, and you have other factors that are pulling you back. Now you just put on the brakes and the cliff dive occurs. My guess is it will signal a major bounce. But again, like I said before, stock market to me, 5-10 years before we make a new all-time high. But you know what, it's gonna put a bottom in, and there's gonna be a new bull market. Bitcoin and gold will outperform, absolutely. As soon as you get a pivot, gold is gonna rip because the dollar will fall. Yeah. And Bitcoin still has some downside because it's still a risk asset, but down the line in like a year, I do expect a major bottom in Bitcoin.
Hold up, so are you saying the NASDAQ is gonna stay flat for 10 years as well?
So not flat, let's be clear on this, not making new all-time highs.
No new all-time highs.
So like think about the .com, right? It took 15 years to make new all-time highs on the NASDAQ. Yeah. If you look at the Brazilian market, if you look at the Hang Seng, both those markets made their highs in 2003, and they have never taken out those highs, but you've still had mini bull markets in there with huge moves to the upside.
But okay, so wouldn't that mean that Bitcoin isn't going to make new all-time highs because it's been correlated with the stock market?
Yeah, you would think that it wouldn't make new all-time highs, but I actually think that there will be a pivot in Bitcoin as it matures, as regulation helps people feel more confident, institutions feel more confident. You're going to start to see it being treated much more like gold, which will then
it's going to start diverging from the stocks.
It will, not yet. I want to be clear to everyone out there. It's still going to take some time, but there will be probably in about 12 months a divergence that begins. First support is 12 to 13,000. I think in the near term we're going to see a little bit of a bounce, then a wave down to 12 to 13, and then I do worry that you're going sub 10 to 8, maybe even worst case scenario 3,500. 3,500, very small percentage, but that would be the equivalent of Amazon.com's collapse in the .com era if it were to equal that.
Okay, gold?
Gold, I'm still a huge bull on gold. Remember, dollar's up 20% this year. Gold at the lowest was down 7%. If it's the correlation with gold and the dollar should have meant gold was down 20% when the dollar was up 20%. So the fact that it's only down 7 or now only down 5 or so, it tells me that big money's buying gold. That means it's going up. I'm a buyer of gold.
At $19,394, Bitcoin is approximately 72% below its November peak. A drop to $12,000 or lower will be over 82% from its all-time high. Though such a drop is not unprecedented for the crypto asset, several analysts have pointed out that November's peak was not a usual blow off top. As such, they believe prices might not drop as much as they did during previous bear markets. What do you think about Gareth Soloway's prediction for Bitcoin and other asset classes? Please drop your comments and observations in the comments section below. Also, ensure you hit the like button, subscribe to the channel, and turn on post notifications so you never miss any of our daily uploads. Thanks for watching.